Welcome to the latest stage analysis video. It's Monday the 2nd of January 2023, so Happy New Year. Going to be going through a large amount of stuff in tonight's video. It's been obviously the end of year video, so I wanted to cover a few other bits that had gone on in terms of looking at the relative strength leaders through the year in terms of the industry groups and how obviously we've used that through the year in order to guide, including the watch list and how it's relevant to that, as well as looking at the IBD industry, the IBD website actually does an end of year top 100 stocks. So I'm going to cover a few of those, the leading ones from those, and show where they were highlighted in the watch lists and how you could have used that and how it's relevant to obviously on the stage analysis website. And obviously regular content, market breadth data. Can look through all of that to determine the weight of evidence as we go into 2023, and watch list stocks in the later part of the video. So get started low. I want to go through where we're at as we start the new year with the major indexes, looking at it on multiple time frames. So it's good to just get a general overview of the indexes, what stages they're in, and kind of how they've been behaving as we start this new year. So starting off as usual with the S&P 500. Since the spring attempt back on October the 13th here, it's had a decent rally, but it's pulled back after a double top failure at the 200-day moving average and original resistance zone. So this is a major resistance zone that's been there over the course of 2022, where the first original swing lows started to form back in January and February and March, and then became support term resistance as we rallied back up into that as it moved back above, but failed break above in August as it hit that 200-day moving average and pulled back down again. But we have had did get a change of behavior with that August rally, so where it started to show some stage one characteristics as this rally attempt here from June through to mid-August time. It's obviously the strongest rally attempt it had. If we look at it on the weekly chart here, you can see what I'm talking about here. So see the downtrend channel that it's been in for obviously the entire of 2022, which if you draw across there, we had this selling climax preliminary supply type move below it back in May, and then actually the ultimate selling climax here in the June low. So you can see the change of behaviors that I'm talking about. So the swings here gradually started to change, and we got this much bigger move here, which is what we call a change of behavior. We got a close above the 30-week moving average there as well. So this was the initial attempt to move into early stage 1A, and as what often happens when you move into early stage 1, you get the first move back above the 30-week moving average, you then get slammed back down again back into the range for a test to the other end of the range. You don't always get a test towards the bottom of the range. Obviously in a weaker environment you do, and in this case we actually had a stage 4 continuation attempt at the bottom of the range where it tried to move lower but then failed, and we got this spring type action that we've had from on that October the 13th low, and since then it's obviously had a rally back up into the range again to touch the upper part of the channel again now. So we've got 4 touch points with this downtrend channel at the moment over the last year. We're hovering in the mid-range of the recent swing. So this area here actually in the middle zone of that, it's actually pulled back around 50% of it and managed to hold so far. So we go back to the daily chart again. If I quickly add a Fibonacci on this, you'll be able to see that a little bit more clearly. So I'll go from there to that, so you can see the pullback, obviously the move up to the top of the range there, and the pullback's only been just around the 50% level of the initial upswing from the October low. So at the moment that is normal behavior. If we start to falter and start to fall back below that level low, we start to move back into this area down here and start closing below there, then obviously that would be a failure of this attempt. So at the moment this is still just a pullback within this near-term rally, this short-term rally attempt, but it obviously is in a fairly weak position there. It needs to start getting back above this 50-day moving average once more here. So move on to the The S&P 500 equal weighted index gives you a slightly different picture than what we can see in the main index. I've talked about this before on previous videos. You can see the major index here is weighted differently. You got the mega caps have a much bigger impact on this. So the equal weighted index, actually, you can see has had a better run since that October low. Obviously a bigger swing than we actually saw during the June to August move. Whereas if you compare to the actual move here, it's been a slightly smaller swing. So a little bit different in terms of how they're behaving. But you can see, as I was just talking about with the move there, this is actually the entire price action of the pullback has formed within the upper part of the range here, and it's actually not come all the way back to the 50% level in that one, and has held above the 30-week moving average here in the S&P 500 equal weight. So showing some relative strength there versus what's going on in the S&P 500 regular chart. So that composite obviously encompasses 4,000 stocks. It's a big index, one of the major indexes in the market, alongside the NYSE that we follow. So both of those together give you a really good idea of what's going on in the market overall. But this is much more heavily weighted in the tech stocks, healthcare, and those kind of areas. So whereas the NYSE, you get much more financials, industrials, materials. So very, very different types of stocks in the indexes. They do have some crossover between them, but you've got a much more heavier weighting of those kind of the tech stocks and healthcare stocks in the NASDAQ. So you can see it's actually lagged the entire length of 2022 here. Again, if we look at the weekly chart on this, I've highlighted on this one the percentage of stocks above their 200-day moving average in the zones. So one thing we do in the stage analysis method is we look at when you're with the percentage of stocks above their 200-day moving average, or the combined moving averages, which I like to use, which is the 200-day, the 150 and 50-day combined chart. You then can do stage analysis to a certain degree on that by just doing a rough kind of guide. When it's below 40%, you're generally in the stage 4 zone. When it's between the 40 and 60%, you tend to be in a stage 1 or a stage 3 type environment. When it's above 60%, you tend to be in a stage 2 type environment. So you can see through the stage 2 run that we had through 2020 into 2021 here, the NASDAQ itself moved through obviously stage 1, stage 3, stage 1 and stage 2 type environments for the majority of the time. But you can see it started to come off here. So all through this period here, as it started to tail off through mid 2021, it was gradually weakening there as the market was still rising. So that's one of those telltale signs that we look for in stage analysis, using the market breadth as a leading indicator, as it's very, very useful in that regard, as it tells you obviously what's going on underneath the surface, which the indexes cannot show you. So we'll see with this head and shoulders type top that we had here, obviously the right shoulder actually happening in stage 4 there. By that point, it was already below 40% in the latter part of 2021. And so on the actual breakdown into stage 4 there, it was all the way down there was only 15% of NASDAQ stocks at that point above their 200-day moving average. So it was very, very clear at the top in the NASDAQ that there was a lot of weakness going on, and most stocks had gone sideways or broken down into stage 4 much, much earlier in the year, all the way back in March time. So in a lot of cases through to the summer period. So at the moment with the NASDAQ, it continues to be in this downtrend. You can see the downtrend channel that I've drawn here. So you can obviously draw your own quite easily. You might change where the bottom point is. Obviously different swing layers. I tend to take the first 2 and then project it, and occasionally add obviously more. Just want to encompass the majority of the move when you're drawing the channel. So within this, we had obviously a down thrust to the underside here, which turned into preliminary support, and then we've got the buying selling climax down here before the change of behavior move, which actually through June into August, where there was some decent strength in the NASDAQ stocks, good short covering rally type move that you tend to see at the start of a base structure. So often when you're in phase A of a base structure, you'll get your move down, your preliminary support, get a bounce, you get your selling climax, and then you get this big change of behavior move where it moves up into your automatic rally, and then you get some kind of secondary test. How deep that test is obviously often tells you how long the move is going to take to base and how strong it is or weak it is. So obviously you get a much higher, if it continues developing at the top up here and you get some kind of spring and move up, then it's much stronger than if you get a move all the way down to the bottom of the base structure like this, and then it starts to do what the Nasdaq has done, which is obviously grind in the lower part. So lot weaker structurally, but it has been making a base structure since obviously all the way back from this point here. But this is our major change of behavior. So you can see the majority of the base structure is actually formed in the lower half of the base structure. So, and it's still within the downtrend channel. But you can see there is a slight change in these swing lows in terms of where it is in terms of the channel. So at the moment it's gradually grinding into this channel here, and we're starting to see stage 1 type behavior, but it is on a weakened state here. So at the moment it will still be considered stage 4. It did attempt to move up into stage 1. We did have a stage 1 early move up here, and then move back down to the bottom of the channel, and the failed stage 4 continuation breakdown here. But obviously with the weak move here, you probably would consider this still borderline within stage 4 and stage 1 type behavior. It is building a range, but there's no definitive stage 1 structure as yet. It's just it's been basing in a weakened state as such. So until the percentage of stocks here starts to move back above this 40% level here quite more convincingly, and we start to get a move back above this 11,500 kind of area, then that potentially would start to show more attempt at stage 1, potentially could quickly move into stage 2 at that point, but we're not there yet. And Russell 2000 as well, similar. We've had this zone across for the majority of the year here. You can see this is where the swing lows formed all the way back in January, February and March time. They then became obviously resistance on the upside as we move back through there. Same as the other indexes, we've got the thrust up to the 200-day moving average and the failure and the move back down again. Continuation to the downside. But we have been forming this base structure again for the best part of the last 6 months or so, maybe even more. So actually going sideways in the Russell 2000, and it's very much in a stage 1 environment. You can see we've got these swing highs that have formed above the 200-day moving average here, where it rolled over once more. It's pulled, still holding in the mid zone since it's pulled a little bit weaker than we saw in the S&P 500 there. It's pulled back a little bit under half of the move, but the majority of the price action is actually formed in the upper half here. So we're looking for this. In order to move to stage 2, it would need to start moving above this 190 area here and through this major resistance zone. So looking at on the weekly chart, you can see that a little bit more clearly. So we need to get a big strong move up through this 190 area in order for that to move into stage 2. But at the moment, you can see there's a very, very clear stage 1 structure developing in the Russell 2000. But stage 1 doesn't necessarily mean that you're going to get to stage 2. It just means the market's moving into equilibrium, and we're going in building a base structure, but that base structure could still fail. You could just as easily make a further stage 4 continuation attempt, and we've seen that obviously many times over the years. So it's no guarantee of stage 2 just because it's developing in stage 1, but obviously if the individual stocks are breaking out into stage 2 and you're developing stage 1 structures, then it does give obviously more emphasis towards that. You can see with the Russell 2000, it had one of the earlier moves into stage 4. Obviously had this big up thrust after distribution at the latter end of last year, but did go sideways for the vast majority of 2021. It was one of the clear signs that the market was weak in 2021, with only the very large caps moving higher and the majority of the market actually just going sideways and chopping around. And then that final failure with the up thrust after distribution of fall back into the range was the big sign of weakness there. And then the major breakdown into stage 4. So we had a decent stage 4 decline there, but it has been going sideways for around 7 or 8 months now. So it's definitely in stage 1 at the moment. But as I said, stage 1 does not guarantee that you can move into stage 2. It could still go back into stage 4 just as easily. So obviously that's why we look at the market breadth, but we'll get back into that a little bit later. Right, QQQJ, just wanted to show this one quickly as well. Just hovering around its 50-day moving average. If you look at it on the weekly time frame here, so this is the Nasdaq second 100 stocks. We had that change of behavior back in June to August there. It's been building a structure since then, going sideways. You had the shakeout move at the bottom in October, as with the other indexes. So again, majority of this price action since the October swing low there has formed around the upper half of that structure there. So if it does start to fall back below that, that would be a major sign of weakness. But if we can continue get back above that 30-week moving average, there's a good chance that this could obviously make a stage 2 breakout attempt, and that would be obviously with a strong move above that 26 level there. So one other I wanted to show quickly before I move on to the next part of the video is the IPO. So this looks a little bit messy. This is a 2-year, 6-month chart here. And we just wanted to show it with the force index indicator laid over the chart. As force index is a really useful indicator for those that struggle to read the volume. So the volume is not always clear. So force index, it divides the price action by the volume. Something else within the indicator. I can't remember what the exact calculation is, but basically it's a price volume indicator, and it gives you a good idea of what is going on in terms of the actual strength of the move, how big the move is in terms of the volume and the spread on the price bar compared to it. So at the moment we've had obviously this big decline into the end of the year here. The IPOs have continued to be weak, but you can see the supply has been relatively tame compared to what we saw back at the start of 2021 when the market was topping. So you can see this big obviously move down there at the top when it went parabolic and rolled over. So it had a huge move down at that point. Obviously didn't broke down into stage 4 in this area over here. You can see relative strength breaking down through there. You can see the supply was still heavy through the early part of the stage 4 decline, but now as we move into the later part here, we've been building a base structure for a while, moved into stage 1, and it's undercut and made stage 4 continuation. So if you look at it on a weekly chart here, you can see that. Let's see, it's undercut, gone lower. So it's made a stage 4 continuation breakdown, but will this turn into a terminal shakeout? So a terminal shakeout happens when you have multiple bars below the base structure, and then you get a strong move suddenly back into the range, a big spring type action, and then it goes all the way to the top again. That's what we call a terminal shakeout in the Wyckoff method. It's called a spring number 1. There's 3 different types of springs, so it's the weakest of the springs. So, but we do still see it quite often. So it is one definitely to look out for, and it is one possibility. But obviously, with it being below for multiple weeks there, the other possibility more likely is that you get a rally up into the old resistance there, and then it fails and makes a continuation breakdown lower. So at the moment, the IPOs continue to be weak in stage 4, and haven't shown obviously a huge amount of signs of recovering as yet. So it continues to be a very weak area of the market, and it's an area that you want to be strong in order to move into stage 2, as when the more speculative parts of the market are strong, and obviously you're in a stage 2 environment, and obviously a very healthy environment. You can see from April 2022 a move up through into May, all the way early May to late May there, and started moving above that rising 30-week moving average there, and had a really strong run through 2020, and then obviously topped out similar to what we saw in the likes of ARK and those kind of areas. The growth stocks started to break down into stage 4. So it's been in a long and deep stage 4 decline, and there's been very little going on within the IPO market. So it's definitely an area that you want to see strengthen and recover in order to move into stage 2. As if this can't recover, then you're unlikely to have a big stage 2 move in the market, really. Right. Next up, I just wanted to show a few of the futures. So the dollar index continues to be key for the likes of gold and silver, and as an inverse play versus the market at the moment. You can see throughout the entire, obviously through 2021, as it bottomed and rolled over and started to move up and out into stage 2, had a really strong stage 2 advance all the way through 2022, and then started to fail and topped out. See, I talked about the buying climax at the time there, and the automatic reaction secondary tests, and then the rollover. So at this point in here, it moved back down, started to show stage 3 type behavior here. You got that change of behavior that I talked about earlier. But it's failed to rally. So normally with the change of behaviour, you normally get a reversal at that 200-day moving average and a rebound back up again, back up into the range. But obviously the fact that this couldn't make a rebound back above the 30-week moving average, there was 0 closes back above it. Obviously started to fall straight down into stage 4 very quickly here. So with the breakdown move, so you can see here, let's highlight this week here, we started to actually break some levels here. So you've got swing lows, you've got previous swing highs through here. So this is actually an early stage 4 breakdown, even though the 30-week moving average is still rising at this point, and the 10-week was still way above at that point when it made that breakdown. However, the 10-week moving average has now crossed below the 30-week moving average here, and it's had multiple weeks below, 5 weeks below that breakdown level here. So although the 30-week moving average is still not turned down, it is actually in stage 4. So it's definitely a positive for the precious metals, which generally trade inversely to it, and it has helped the market over the last few months in order to rally there. Treasuries, T-bond futures continues to be in a deep stage 4 decline. There has been a little bit of a change of behaviour recently, so there's potential this is a selling climax, automatic rally, so you can draw your structure. We've got a potential start of a stage 1 base structure, but it's not there yet. It needs to prove itself. We haven't completed phase A yet. So phase A would be your selling climax, your automatic rally, and wherever the secondary test happens. So if the secondary test happens here and we start to get a rebound, then that would be the complete phase A, and then we'd be starting to move into a structure. But if it continues lower, then obviously we've got no idea where it's going to end yet, and it could just be a further stage 4 continuation. So when you get a change of behaviour, that's not yet a change of character. It's just a sign that we're starting to get a little bit more neutral. A potential base is attempting to form, but as we saw with the previous move here, doesn't necessarily mean that that's gonna happen. There's no obviously move to a base here. Didn't manage to come back up again. It just failed. So until that happens, we're still just a change of behaviour, still in phase A of a potential base in the downtrend still. Gold, still testing the stage 2 breakout level at the moment. It's tested it for 4 or 5 weeks now. So the 10-week moving average has moved back above the 30-week moving average. Our SATA score is on a 7 at the moment. So it is technically healthy at the moment. So previous stage 2 breakout here, when it may have failed after a few months, but had a decent run for a good month or two and some good moves in the individual stocks, but topped out, double top move and rolled over and managed to make a further stage 4 breakdown move. So it's now turned itself around, reversed back up. So still in stage 1 type behaviour at the moment, started to hold back above that 30-week moving average. It's been testing the top of the range here, so no guarantees that it's going to move into stage 2 here. Could quite easily just roll over and come back into the range and continue to develop in stage 1. But there have been some stage 2 breakouts in the individual gold stocks because of the strength of this. And if we look at silver did actually break out into stage 2, 5 weeks ago here. So it started to come out of this lower base structure and then the secondary point here. So this was your actual stage 2 breakout move here. And it's now obviously moved higher. There's not quite so many actual silver miners in stage 2 levels. A lot of them had really deep stage 4 declines. So their stage 1 bases, they were still, when silver actually started to break out into stage 2, there was quite a few that were still quite underwater, still in stage 4B minus or still in stage 1, just making breakouts within their stage 1 bases and below the 200-day moving averages still. So silver's actually leading the miners in that regard, whereas gold, on the other hand, is doing the opposite. There's actually a bunch of gold stocks that have already moved into stage 2, whereas gold itself hasn't. So it's a little bit different in that regard. We've got crude oil. So crude continues to, after the buying climax, reaction and secondary test. So started to roll over, stage 3 type behaviour. I highlighted that all through at the time, through the year, talked about it extensively. So that obviously was a strong area in the market until it started to break down. It started to get that move down here. At that point there, said it's still not convincingly stage 4 at that point because you've still got a rising 30-week moving average. You can see here although it's a breakdown, it's still got the rising 30-week moving average. So at this point here, the secondary move, the back up, was actually where it starts to get more. That's now technically in stage 4 at that point. It's obviously been continuing lower in stage 4, making lower lows and lower highs so far. So it's in a downtrend. It's in stage 4, but individual stocks in the oil groups are still holding up in stage 3 type structures, with some making some stage 2 continuation attempts. So I did talk in recent videos in this about coal as well, about the fact that with gold in stage 4, not gold, oil in stage 4, there's obviously a big risk with those oil stocks after such big stage 2 moves that they could be rolling over in stage 3, and those stage 2 continuation attempts could turn into upthrusts after distribution. So it's definitely an area of high risk at the moment. So not an area I would obviously be focusing on, and you can see that in terms of during this entire move here, I've barely highlighted any oil stocks in the watch list, whereas during this period here, it was much more oil stocks showing up in the watch list in the earlier part of the year. Copper as well, still in stage 1 here. You can see the lower structure developed, made the up thrust move when it was still declining 30-week moving average there. So looking for this the 30-week moving average to continue to flatten out and start to turn up, and obviously for some kind of stage 2 breakout attempt. Then individual groups, we've already gone through these, but you can see at the moment, I'll just literally highlight the SATA scores on these, get to the start. So you've got currently it's S&P 500 E-mini futures on a SATA score of 4, so very much in the stage 1 zone there. You've got the NASDAQ 100 on a SATA 2, so in the stage 4 zone. You've got the Dow Jones on a 7, so you can see it's actually made a failed stage 2 breakout attempt and has pulled back into the range. So technically strong, but still within stage 1. Russell 2000 here, you can see on the neutral in a SATA 4, so in stage 1. And then the Stocks 50, which is the Euro stocks, actually made a stage 2 breakout and hasn't failed on this one. It pulled back in. It's in the backup zone at the moment, so looking for a stage 2 continuation type move in that one. So Euro stocks showing more relative strength at the moment. The VIX, just to finish off this segment, is basically in what we got. We're below the 200-day moving average here. Price action has pretty much been in line there. We continue to be in a modest neutral zone here. Want to see this continue to drive lower. Obviously, the further away it gets from that 200-day moving average, the better. So in terms of more positive for on the long side of the market, if it starts to actually get back above this, obviously that would be a huge negative, and that would be a move us back to a risk-off type environment.